Today, I'm going to share 2 growth stocks I just bought this week during this dip, both of which are trading 30% below their all-time highs. What's up everyone, my name is Coleman, and in this video, I'm going to be going over 2 growth stocks I just bought during this most recent dip. The first one is a company I already held and added more to my position, and the second one is a new addition to my portfolio. For each stock, I'll go over the company and why I like each one. But with that said, let's waste no time and get right into the first stock I just bought, and that is Palantir, ticker symbol PLTR. Palantir recently went public in September of 2020 and quickly ran up to $40 a share, although since then it's down about 40%, which is around the price I have been buying. For those of you that don't know, Palantir is a software company that revolves around data and artificial intelligence. Now this tends to be a rather complicated company, but in the simplest terms, both governments and large businesses use this software to analyze their data and then make better decisions with that data. Palantir offers 2 main software platforms, Foundry and Gotham. Gotham was constructed for defense and intelligence agencies, and Foundry is built for commercial use. You can also see they offer Palantir Apollo. This is just software that powers Foundry, Gotham, and their SaaS platforms. To understand how powerful and versatile all of this software is, it's rumored that it was used to find Osama bin Laden and convict Ponzi schemer Bernie Madoff. Hershey's uses it for global food distribution to correlate weather patterns with snack consumption, and the Pentagon uses it to track and predict where roadside bombs are located. With that said, Palantir currently works with over a dozen government agencies like the CIA, FBI, CDC, and the NSA, just to name a few. On the commercial side, they work with 8 of the Fortune 100, 12 of the Global 100, and 24 of the Global 300, although I would expect that to increase in the coming years. Some of their commercial customers include BP, PG&E, Airbus, and Fiat Chrysler. Keep in mind, some of these commercial clients like Airbus operate very low margin businesses, so the fact they're paying Palantir millions of dollars gives some indication of how much value Palantir's software provides. So why do I like this company? Well, a few of the main reasons revolve around their growth and management. For one, I believe Palantir has many strong years of growth ahead. We live in a world that is becoming increasingly reliant on data, and as we shift in that direction, a company like Palantir is positioned to benefit. Analysts also seem to agree with this, and this year they're projected to grow revenue by 35%, and next year their revenue is projected to grow by 29%. Growth likely doesn't stop there though, because their CEO Alex Karp has said they're projecting to grow revenues 30+% for each of the next 5 years. A lot of this growth will be on the commercial side and will revolve around Palantir's strategy of acquiring, expanding, and scaling. For starters, they currently only work with a handful of Fortune 500 companies, so there's definitely an opportunity to acquire more Fortune-sized companies. One way they plan on doing this is by growing their sales team, which is an area they've historically not focused on. In a recent conference call, they said they expect to add triple-digit headcount to their sales function in 2021, and so far this year, they've already added about 50 people. Also, Palantir recently announced that they were going to start offering their software for free to companies in key industries. This is called Palantir Unlock. Now, how many Fortune-sized companies they'll offer this to remains to be seen, but it's something to keep an eye on. In addition to that, they're beginning to scale down some of their product offerings so they can acquire small to medium-sized businesses. While this is still in the early stages, this could be a huge area of growth for Palantir, since they have so many additional companies they'd be able to target. Now once they've acquired these customers, they also have the opportunity to grow revenue by expanding and scaling. For example, their average revenue per customer increased by 41% in 2020. So they're beginning to generate more revenue from customers who are in the acquire phase, which is the beginning of their business cycle. This also means that as they begin to move their existing customers into the later stages of their business cycle, Palantir can grow their revenue without needing to acquire new customers, which is nice. To me, this is also more proof that customers like Palantir's software. Now there are also other areas they're looking to grow, such as their government business and some recent partnerships with IBM and Amazon, But right now, I'm particularly focused on their commercial customers. Another reason I really like this company is because of their strong management. Peter Thiel, who was a co-founder of PayPal, sits on the board of directors on Facebook, and was an early investor in SpaceX and LinkedIn, is their chairman. His friend Alex Karp is their CEO. Another important person is Stephen Cohen, who built Palantir's initial prototype. Between these three people, they control 49.99% of the total voting power of the company's stock. So any of the major decisions are controlled by them. Now, some people consider this to be a risk, but after researching these individuals and listening to interviews, I've actually been very impressed by all of them and the direction that they want to take the company. So between Palantir's growth and their management team, these are just a few of the reasons why I really like this company for the next decade and why I've been buying this stock. Now let's move on to the second growth stock I just bought, which is a new addition to my portfolio, and that is Trulief, ticker symbol TCNNF. Trulief peaked around $53 a share in February, and since then, it's dropped to $33 a share, which is where I just started buying. Now, if you didn't know, Trulief is a vertically integrated cannabis company in the US. So they cultivate and produce all of their products in-house, and then distribute those products to Trulief branded dispensaries around the US. In total, they operate in 6 states: Florida, California, Connecticut, Pennsylvania, and West Virginia, although Florida is by far their largest market. Out of Trulief's 89 dispensaries, 83 of them are in Florida, which makes them the leading medical cannabis company in the state with 48% market share. So why did I just start buying this company? Well, there are a few reasons, and they revolve around the company's growth and valuation, but I'll also touch on the Delta variant, which caused a recent dip. On the growth side, their past growth has been very impressive, as you can see, and in the coming years, their growth is projected to be nearly as impressive. This year, analysts project Trulief's revenue to grow by 67%, and next year, their revenue is projected to grow by nearly 32%. Additionally, EBITDA is projected to grow by 56% this year and 30% next year, so they're also becoming more profitable. In fact, they're actually one of the most profitable cannabis companies, which is an indication of how well run they are. To add to this, it also helps that they operate in a growing industry. Mortar Intelligence expects the cannabis market to witness a compounded annual growth rate of 18.1% between 2021 and 2026, with North America being the fastest growing market. So this is nice for a company that focuses on the US market. Now, to achieve this growth, the company is looking to grow their business both internally and externally. Internally, they're looking to increase their number of locations, even in Florida. For 2021, they've stated that their goal is to have 114 stores in the US by the end of the year. In a recent conference call, they said that many of these are targeted for Florida to help keep up with the demand. They're also beginning to build out their brand outside of Florida, and they've added locations in California, Connecticut, Pennsylvania, and West Virginia. That said, they only have about 1 to 2 stores in each of these states, which is a far cry from their 83 locations in Florida. So in these 6 states alone, there's a lot of opportunity for new locations, assuming they perform similar to their Florida stores. To add to that, there are still many other states that Trulief could eventually expand into, so that could be another opportunity down the road. Externally, the company is growing through acquisition. In May, Trulief announced the acquisition of Harvest Health in a $2.1 billion deal. Harvest is the largest cannabis operator in Arizona, and they operate in 9 states and have 39 dispensaries. So this move gives Trulief even more reach into new markets around the US. Cowen Research said that this deal will give Trulief industry-leading margins at 37%, and the transaction will create the largest US cannabis operator on a combined retail and cultivation basis, and the most profitable US cannabis company on an adjusted EBITDA basis. Trulief's also acquired other companies in the past, and I would expect this strategy to continue in the future. Now, as far as valuation, Trulief trades at a forward PE of 18, which is really good in this market, especially when you consider their growth. When you compare their forward PE to some of their closest competitors, it looks even better. Curaleaf, Green Thumb, and Cresco all trade at forward PEs over 30. Plus, all of these companies have lower margins and they are less profitable than Trulief. The same trend goes with metrics like price to sales, where Trulief has the second lowest multiple, and EV to EBITDA, where Trulief trades at the lowest multiple. So on a valuation basis, this is a company I feel I'm getting a good value on based on their current multiples, which is one of the reasons I've decided to buy in. Now, as far as why the price has been dropping recently, concerns about the Delta variant and possible lockdowns have been dragging down the entire stock market recently, and this has also affected Trulief stock. But in my opinion, I thought this presented a nice buying opportunity for me, and the correction seems to be an overreaction if you look at Trulief's business. Let's say the worst possible scenario happened, and we were forced into more lockdowns. I'm not saying this is gonna happen, but let's go over a situation if it did, because it'll help show you why I still felt comfortable buying this stock. We already know from previous lockdowns that Florida was one of the states locked down the least. Whether you agree with this or not, Governor Ron DeSantis has said in December that Floridians shouldn't expect any additional lockdowns during the pandemic, no matter what happens. We also know that the majority of Trulief's business is done in Florida. Out of their 89 dispensaries, 83 of them are in Florida, and out of their 114 store goal, many of those are going to be in Florida. When we put this together, we know that Florida is highly unlikely to lock down again, and Trulief operates mostly in Florida. So even if the Delta variant were to cause more lockdowns, which is probably unlikely, a lot of Trulief's business would be pretty well protected. So in addition to the fact that I like their growth and valuation, which was helped by the recent sell-off, I also felt the dip was probably an overreaction, which is why I felt comfortable buying, even though the market was concerned. Now I could be wrong on all of this, so we'll have to see how it plays out, but that's just how I thought through the entire scenario. With that said, if you liked the video, don't forget to hit the like button, and if you want to see more videos like this one, please subscribe down below and hit the notification bell. Thank you so much for watching, and I'll see you in the next one.